Bitcoin, 7 Steps to Master the Market with Technical Analysis. Bitcoin trading is an activity that requires being aware of market fluctuations and investment opportunities. To do this, many traders use technical analysis, a methodology that is based on the study of data and historical price patterns to predict the future behavior of an asset. In this article, we will explain what technical analysis is, how it is applied when trading Bitcoin, what technical indicators are most commonly used, and what benefits and limitations does this approach have. What is technical analysis? Technical analysis is a way of evaluating the cryptocurrency market by using historical data and price patterns to identify trends and predict future price movements. The basic premise of technical analysis is that the price of an asset reflects all the information available about it, including supply and demand, investor expectations, news and events. Therefore, by analyzing the past behavior of the price, you can get an idea of how it could evolve in the future. Technical analysis is based on the use of price charts, which show the evolution of the price of an asset over time. Whether these charts can be customized based on different time frames, from minutes to years. Chart types, such as lines, bars, or candlesticks, and scales, such as linear or logarithmic. Traders use different tools and indicators to analyze price charts and detect patterns that suggest possible future scenarios. These indicators can be classified into two main categories: trend indicators and momentum indicators. Trend indicators are those that help identify the general direction of the market, whether bullish when the price rises, bearish when the price falls, or sideways when the price moves within a range. Some examples of trend indicators are moving averages, trend lines, and channels. Momentum indicators are those that measure the strength or speed of price movement, indicating whether the market is overbought when the price is too high, or oversold when the price is too low. Some examples of momentum indicators are the Relative Strength Index, RSI, the stochastic oscillator, and the MICT. How is technical analysis used in Bitcoin trading? Technical analysis is widely used in Bitcoin trading as a way to predict future market trends and identify optimal entry or exit points. Traders use a combination of technical indicators to analyze price charts and identify signals that suggest whether prices are likely to rise or fall. For example, if a trader notices that the price of Bitcoin is above its simple, moving average 200-day SMA, you could interpret this as a bullish signal, indicating that the price is in a long-term upward trend. On the other hand, if you see that the price is below the SMA, you could interpret this as a bearish signal, indicating that the price is in a long-term downtrend. Also, if you see that the RSI is above the 70 level, you could consider this as an overbought signal, meaning the price is too high and could fall soon. On the contrary, if you see that the RSI is below the 30 level, you could consider this as an oversold signal, which means that the price is too low and could rise soon. In this way, traders can use technical analysis to determine when to buy or sell Bitcoin based on your trading strategy and goals. However, it is important to note that no technical indicator is foolproof, and there is always the possibility of unforeseen events affecting the market. What are the benefits of technical analysis in Bitcoin trading? Technical analysis has several benefits that can improve Bitcoin trading, such as allows you to identify optimal entry and exit points, which can increase profits and reduce losses. Reduces emotional decision-making during trading, which can avoid costly mistakes and improve discipline. It provides a systematic and objective approach to trading, which can make it easier to track and evaluate performance. It adapts to different trading styles and time frames, allowing traders to customize their strategy based on their preferences and goals. What limitations does technical analysis have in Bitcoin trading? Technical analysis also has some limitations that need to be kept in mind when trading Bitcoin, such as it does not take into account fundamental factors that can affect the market, such as supply and demand, news and events, regulation and innovation. It does not guarantee accurate or profitable results as it is based on assumptions and probabilities that may not be true. It can be subjective and confusing, as there are different interpretations and opinions on the same data and patterns. You may be prone to confirmation bias, which is the tendency to seek out or interpret information that confirms prior beliefs or expectations. How to complement technical analysis with fundamental analysis to obtain a more complete and balanced view of the Bitcoin market. It is advisable to complement technical analysis with fundamental analysis. Fundamental analysis is another method to evaluate the cryptocurrency market that is based on the study of the internal and external factors that affect the value of an asset. Fundamental analysis focuses on analyzing the quality and potential of an asset, considering aspects such as its supply and demand, its usefulness and functionality, its security and reliability, its innovation and development, its competition and competitive advantage, its adoption and acceptance, its regulation and legality, among others. The goal of fundamental analysis is to determine the intrinsic or real value of an asset, compare it with its current market price, and decide whether it is undervalued or overvalued. In this way, traders can identify long-term investment opportunities based on the potential growth of an asset. For example, if a trader believes that Bitcoin has a higher intrinsic value than its current market price due to its scarcity, decentralization, censorship resistance, constant innovation, and growing adoption, he or she might decide to purchase Bitcoin as an investment long-term. On the other hand, if you believe that Bitcoin is overvalued due to speculation, volatility, technical risks, competition, or adverse regulation, you could decide to sell Bitcoin or look for other alternatives. By combining technical analysis with fundamental analysis, traders can gain a more holistic view of the Bitcoin market and make more informed and rational decisions. Technical analysis can help identify current market trends and optimal entry or exit points. Fundamental analysis can help evaluate the quality and potential of the asset and its long-term prospects. Conclusion: technical analysis is a valuable tool that helps traders gain insight into Bitcoin price movement, allowing them to predict future trends and make well-informed decisions. However, it is not enough to rely on technical analysis alone to be successful in Bitcoin trading. It is important to complement it with a fundamental analysis to obtain a more complete view of the market. Furthermore, it is essential to have a clear trading strategy, proper risk management, and constant discipline to maximize opportunities and minimize losses. Recommendations: study and practice the use of technical and fundamental indicators, as well as their advantages and limitations, before applying them to real trading. Follow relevant news and events that may affect the Bitcoin market, such as regulatory changes, technological innovations, adoption trends, etc. Establish a clear trading plan with defined objectives, an appropriate strategy, a reasonable budget, and an acceptable level of risk. Use tools and platforms that make it easy to analyze and trade Bitcoin, such as oiltradery.com, which offers advanced analysis and tools designed specifically for cryptocurrency traders. Remain calm and disciplined during trading, avoiding impulsive or emotional decisions that may harm performance. If you want to be well informed, subscribe to Cryptmundo. Recommended books: Bitcoin, a Cryptographic Currency. This book analyzes the architecture and operation of Bitcoin from a technical point of view. Explains concepts such as cryptography, blockchain, transactions, mining, and nodes. It also addresses topics such as security, privacy, and the challenges facing Bitcoin. You can download it for free in PDF from the web. What it is and how to apply technical analysis to a cryptocurrency like Bitcoin. This article offers you an introduction to technical analysis and its basic principles. Teaches you how to use tools such as charts, indicators, patterns, trends, supports, and resistances to interpret the price behavior of Bitcoin and other cryptocurrencies. You can read it online. The best technical analysis books. This list recommends some of the most recognized and valued books on technical analysis in general. Although they do not focus specifically on Bitcoin, they can help you expand your knowledge and improve your skills as a trader. These include Getting Started in Chart Patterns by Thomas N. Bulkovsky, The Market Wizards series by Jack D. Schwager, and Technical Analysis of the Financial Markets by John J. Murphy. If you want to be well informed, subscribe to Cryptmundo.